What is Islamic finance? Welcome to today's video where we'll demystify Islamic finance. If you've ever wondered about ethical ways to handle money or are simply looking for an alternative to conventional finance, you're in the right place. Islamic finance combines moral principles with financial tools and practices, making it both fascinating and practical. By the end of this video, you'll feel confident in understanding what it is, how it works, and why it's gaining popularity around the globe, whether you're Muslim or not. Let's get started. So, what exactly is Islamic finance? Simply put, it's a financial system based on Islamic law, also known as Sharia, but don't let that intimidate you. At its core, this system prioritizes fairness, ethics, and transparency. Islamic finance isn't just about religion. It's a universal approach that anyone can use to manage money in a socially responsible way. The main difference between Islamic finance and conventional finance lies in its guiding principles. Unlike traditional banks or investment systems, Islamic finance operates on moral frameworks. How? By adhering to rules that prioritize justice, shared prosperity, and avoiding harm to individuals or society. Whether you're opening a bank account, financing a home, or investing, Islamic finance strives to ensure fairness for all parties involved. Now let's dive deeper into its key principles. Here's where things get interesting. Islamic finance has some distinct features that set it apart, and these differences are what many people find appealing. Prohibition of interest, Riba. In Islamic finance, charging or earning interest, Riba, is a big no-no. Why? Interest often exploits borrowers and creates unfair financial burdens. Instead, Islamic banks use profit-sharing models. They can share in the rewards, but they also share the risks. This creates a more balanced relationship. Risk sharing. Unlike traditional finance, where the lender often shoulders no risk, Islamic finance ensures both the lender and borrower share the ups and downs of a financial transaction. For example, if you start a business with an Islamic financial institution, profits and losses are divided based on agreed terms. This creates more financial justice. Ethical investing. Have you ever thought about where your money goes when you invest it? Islamic finance prohibits investments in industries that harm society like gambling, alcohol, and tobacco. The focus is on funding activities and businesses that align with ethical standards and contribute positively to society. Charity, zakat. Another unique component is the idea of giving back. In Islam, there's a concept called zakat, which means giving a portion of your wealth to help the less fortunate. Islamic financial practices often integrate charitable contributions into transactions, reinforcing the system's focus on improving lives and communities. No speculation or excessive risk. Unlike some forms of high-stakes investments, Islamic finance avoids speculative trading or gambling, garah. This keeps financial dealings fair, predictable, and stable. The goal is not only protecting individuals, but also fostering a healthier economy. Islamic finance isn't as complicated as it might sound. Some of the tools and methods it uses are quite similar to what you'd find in conventional finance, but adjusted to align with ethical principles. Let's explore a few key practices. Murabaha, cost-plus financing. Think about buying a car. Instead of offering a loan with interest, an Islamic bank would purchase the car for you and sell it back at a marked-up price. You pay for it in installments, and the markup is agreed upon beforehand. No hidden fees, and everyone knows the terms from the start. Ijara, leasing. Similar to leasing systems in conventional banking, Ijara allows you to use an asset, like a home or equipment, while paying rent for its use. Once you've made all the payments, you can own the asset or return it, depending on the agreement. Sukuk, Islamic bonds. Instead of traditional interest-based bonds, Sukuk represents ownership in a tangible asset. Investors earn returns from the profits generated by that asset, ensuring their money is tied to real ethical ventures. Mudarabah, profit sharing. Imagine you have a brilliant business idea but need funding. With Mudarabah, the financial institution provides the funding, while you provide the expertise. Both parties share the profits, but if there's a loss, it's only the institution's money at risk. Another way of balancing financial risks. Musharaka, joint partnerships. This is a bit like having a business partner. Both parties contribute funds to a project and share the profits according to a pre-agreed ratio. Losses are also shared, making this a true partnership. Beyond its main principles and tools, Islamic finance is marked by what it doesn't support. Here are key activities that it avoids. Speculative investments, qarar. Islamic finance avoids dealing in excessive uncertainty or speculative trading, things like gambling, derivatives, or currency trading that could destabilize personal finances or the economy. Excessive risk-taking. Some investments can feel like a high-stakes gamble, but Islamic finance steers clear of anything involving unnecessary financial risks, creating more stable options for individuals. Harmful industries. Ethical investing comes down to where your money goes. Industries such as tobacco, alcohol, gambling, and anything harmful to society are off limits. You might be wondering, if Islamic finance is based on religious principles, why has it gained appeal around the world, including non-Muslim communities? The answer lies in its ethical foundation. Increasingly, people are looking for inclusive, values-driven financial systems, and Islamic finance ticks all the right boxes. It's not just limited to Muslim-majority regions either. Countries across Europe, Southeast Asia, and even North America are seeing growth in Islamic banking options. Why? Because it offers a fairer, more transparent, and socially responsible alternative for anyone who values these principles. Let's not overlook corporate interest. Many businesses find Islamic finance appealing because its shared risk nature fosters trust in commercial partnerships. If you're new to the world of finance, Islamic finance offers some great benefits, and you don't need to be an expert to start using it. Fair deals for everyone. Islamic finance ensures that no one feels exploited. Whether you're taking out a home loan or starting a business, the agreements are transparent and tailored to be fair. Ethical savings and investments. If you're someone who wants to know where your money is going and that it's being used for good, Islamic finance ensures your funds are going to ethical and sustainable projects. Practical financial solutions. From buying your first car to investing in real estate, Islamic finance offers tools meant to work for everyday individuals, not just corporations. Let's tackle some common myths. First, you don't have to be Muslim to benefit from Islamic finance. It's open and accessible to anyone, regardless of religion, because its principles promote universal values like equity and accountability. Second, it's not about giving away money for free. While Islamic finance integrates charity through zakat, its banking tools and investment options are still carefully structured to ensure financial goals and fairness for all parties involved. Lastly, it's not too complicated. Many systems in Islamic finance mirror those in conventional banking, just with an ethical twist. At the end of the day, Islamic finance offers a refreshing take on money management, whether you're saving, borrowing, or investing. It proves that financial systems don't have to prioritize profit at the cost of ethics. Instead, they can align profitability with fairness and community welfare.